Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Equity Bankchares Inc. quarterly report. Equity Bank provides a wide range of banking services to individual and corporate customers across 4 states: Arkansas, Kansas, Missouri, and Oklahoma. The company's offerings include deposit products such as demand, savings, money market, and time deposits, loan products including commercial and industrial loans, mortgages, agricultural loans, and consumer loans, debit and credit cards, insurance brokerage services, trust and wealth management services, online banking solutions with features like account balance access, online transfers, bill payment, and electronic statement delivery, mobile banking solutions with remote check deposits, and mobile bill pay cash management deposit products such as Lockbox, remote deposit capture, and sweep accounts treasury management services including balance reporting, wire transfer initiation, and automated clearinghouse origination. The stability of Equity Bankchares Inc.'s stock price over the past year can be attributed to several factors. Despite positive financial results and strategic expansions, the stock price remained relatively unchanged, with no significant decline exceeding a -3.16% decrease. This stability is largely due to the company's consistent delivery of strong earnings reports, including surpassing EPS and revenue expectations in its third quarter 2025 report. Additionally, strategic acquisitions such as the merger agreement with NBC Corp of Oklahoma and the acquisition of Frontier Holdings, LLC were viewed positively by the market, indicating a long-term commitment to growth. The declaration of quarterly dividends also contributed to the stability, as investors tend to view dividend increases as a positive signal. Furthermore, analyst ratings and price targets remained favorable, with most analysts maintaining moderate buy or hold ratings and suggesting an upside from current levels. Overall, these factors combined to create a stable market environment for Equity Bankchares Inc., resulting in no significant stock price changes beyond the -3.16% threshold over the past year. The primary drivers of revenue growth or decline can be summarized into several key areas. Revenue growth is primarily driven by an increase in net interest income, which rose by $2.4 million due to higher interest rates. Additionally, the bank saw significant growth in commercial real estate loans and agricultural loans, as well as increases in debit card income, bank-owned life insurance income, investment referral income, trust income, and non-interest income from merger expenses. On the other hand, revenue decline is primarily attributed to a decrease in non-interest income by $0.6 million, largely due to declines in service charges and fees, mortgage banking income, net gain on securities transactions, and income loss from equity method investments. The commercial and industrial loan portfolio saw significant growth, but this was tied to industry strength and business success rather than a direct driver of revenue growth. Similarly, the total real estate loans increased, but this was influenced by local market conditions rather than being a primary driver of revenue growth or decline. Net income and profit margins decline due to decrease in interest income and increase in expenses. The financial performance of a company has taken a downturn, with net income decreasing by $49,514 in the 3 months ended September 30, 2025, compared to the same period in 2024. This decline is also reflected in the net income margin, which dropped from 1.3% in 2024 to -2.03% in 2025. The primary reason for this decrease is a drop in net interest income after provision for credit losses. Additionally, non-interest expenses have increased, contributing to the decline in profit margins. The company's ability to generate interest income has been negatively impacted, while its expenses have risen, resulting in a significant decrease in net income and profit margins. The 9-month period ending September 30, 2025, saw a slight increase of $642 in net income compared to the same period in 2024. However, this modest gain is overshadowed by the substantial decline in net income during the 3 months ended September 30, 2025. The company's financial performance remains a concern, and addressing these issues will be crucial for future growth and stability. The company is generating a significant amount of positive operating cash flow. In 2025, the operating cash flow reached $58,416, indicating that the business is able to generate sufficient funds from its core operations. Furthermore, the net change in cash and cash equivalents was $53,000, $715, demonstrating a substantial increase in liquidity. Additionally, the company's overall operating cash flow for the period was $383,747, which is a strong indicator of financial health. The company's debt level and interest expenses have undergone significant changes over the past year. Initially, the debt level decreased from $903,858 to $898,924, page 21. However, this trend was short-lived as total Federal Home Loan Bank advances increased significantly from $178,073 to $341,378, page 46, leading to an overall increase in debt level from $3.48 billion to $4.2 billion, page 87. Regarding interest expenses, the picture is more complex. While there were instances of significant increases, such as an 11.3% rise from $75,815 to $86,728, page 18, and an increase from $72,017 to $77,390, page 63, other periods saw substantial decreases. For example, interest expenses decreased significantly from $74,187 to $28,613 between September 30, 2025, and December 31, 2024, page 69. Overall, the data suggests that while there have been fluctuations in interest expenses, they have not consistently increased or decreased over time. Commercial real estate shines amidst regional variations. The financial summary reveals a mixed performance across different segments and regions. Notably, commercial real estate stood out as a strong performer, with significant returns of $14,360, page 62. In contrast, agricultural real estate and the agricultural segment struggled to keep pace, posting lower figures of $3,668 and $5,163 respectively. These discrepancies highlight regional variations in performance, underscoring the need for targeted strategies to address specific market conditions. Management is cautiously optimistic about the company's outlook, citing various risks and uncertainties. However, significant investments in purchasing net assets of other companies indicate a growth strategy. The acquisition of NBC Corp has expanded the company's footprint in Oklahoma, contributing to increased non-interest income. Management believes that the allowance for credit losses is adequate to cover current expected credit losses. To manage interest rate risk, the company uses simulation analysis and derivatives to hedge borrowing costs. Overall, management is focused on maintaining sound asset quality and capital reserves to maintain market confidence. That concludes the financial summary for Equity BANCSHARES Inc. Feel free to comment below, and I will be happy to answer them when possible.